For more on Alibaba's IPO happening this Friday at the New York Stock Exchange, we're joined by Scott Roston. He's the president and founder of Training the Street. Scott, good to have you on the show.
Thank you for having me.
All right, so big news of the day, Alibaba filing with the Securities and Exchange Commission saying that they will now raise the price range from 66 to 68. What's the significance?
And you've been saying the word demand, and Kathy was saying demand too. This is a monumental event, and I think it actually is very simple supply and demand. So there's more investors interested in the shares, so by bumping up the price, they can hopefully bring a little bit down on the marginal demand.
Well, there are reports now from Reuters citing people familiar with the matter that Alibaba may also increase the size of its offering. Do you think we can expect that?
Possibly, but they have to be very careful. Facebook did that also in their IPO. And usually when there's strong demand, you either raise the price, as Alibaba's has done, or you raise the number of shares in the offering. You usually don't raise both because it can get the supply-demand out of balance.
Right, and what Alibaba was trying to avoid with being on the more conservative range of the pricing was that post-IPO letdown that we saw with Facebook. So is it in danger of potentially jeopardizing that position with the increased price range?
Potentially, but Facebook is on everybody's mind. I mean, with their listing at the New York Stock Exchange as opposed to the NASDAQ, that's on their mind. And also the performance of also bumping up the price and the size at the same time can make for a very delicate situation.
Well, Alibaba is already oversubscribed. We're getting that loud and clear from various reports. And we're only at the start of the second week of the roadshow with Jack Ma and the team in Hong Kong. So what's the point of continuing with the trip to Europe? Is there any significance by the fact that it's already oversubscribed? And what happens now?
There's still scheduled meetings with investors. And it's also a marketing and selling event. So you want to meet those investors, be able to tell your story, tell the growth story. And remember also with an IPO, you're now going to be selling your shares obviously to the public. And something we emphasize in class all the time, you're now going to be under the scrutiny of the public as opposed to the private company.
The public is certainly in question with regards to how much recognition of the brand there is amongst retail investors in the US. Do people outside of the immediate industry know and appreciate Alibaba?
That's a very good question, and you would have to talk to the common retail investor, which is hard to do.
But what is your read on that?
My read on that is probably not. They can understand an online marketplace, but they immediately think of an eBay or an Amazon. And Alibaba sales last year in their marketplace was more than eBay and Amazon combined on a volume basis. So by their model is also very similar to eBay of taking a commission and supplying the infrastructure to that marketplace. So
Scott, you've been involved in various IPOs at your time in Merrill. What is the reason that this is so oversubscribed? What do you attribute that to? And how common is it that so early into the roadshow, you have such a high level of demand?
It's rare. This is a kind of an elephant, if you will, of a type of event, and it's because of the massive size of an Alibaba. Companies of this size, where institutional investors especially, can get a significant stake right away in a very liquid and well-traded stock on a global basis. This is almost a once-in-a-lifetime opportunity.
Scott, there were a number of concerns that investors were focused on before the roadshow. The use of VIE, variable interest entities, the potential concern of government regulation, with Alibaba being so big that there could be competition regulation coming out of China. There was the unorthodox acquisitions, which seemed a little...
A football team.
A football team, exactly, which seemed a little willy-nilly. What happened to all of these concerns? Have they just evaporated, or do you think Jack Ma has successfully allayed them?
Jack Ma and his team, I think, have successfully sold investors on the story of the company. They've got fantastic momentum. They're growing very well. They're profitable. They're an industry leader. They're in a growing market in China, and they haven't even touched U.S. and Europe.
Well, Jack Ma mentioning today that they will be touching U.S. and Europe. Who should be worried about that? Should Amazon have its guard up?
Amazon should, eBay should, other internet companies, I mean, and anyone should. I mean, with the companies of this, there's such a convergence among all these companies to become very similar in those areas. So it's going to be very interesting to see how that unfolds.
Scott, we keep on saying epic IPO, biggest IPO. With that size, there comes a bit of concern. Do we expect everything to go smoothly on Friday, or do you think there could be a situation where there's just overwhelming demand and that could sort of bog down the system?
There very well could be, but I'm sure the NYSE is double and triple checking and double checking the backup systems to the backup systems. They're going to stress test everything to make sure that it's smooth and orderly as possible. And by actually getting the demand in earlier and starting to fulfill that book earlier, they can start to place those orders in a little bit more of an orderly fashion when the stock debuts on Friday.
Okay, big day on Friday. Thank you so much. Scott Roston, president and founder of Training the Street.